In this video, I'm going to share with you how did I make over $400,000 in the span of 4 months using just one simple breakout strategy. This strategy is so simple and easy to use that it's able to solve 90% of your trading problems. I used to wonder, how do I actually catch real breakouts and ride the big momentum waves so I can make a lot of money. So in this video, I'm going to show you exactly how did I do that for the past few months. Without further ado, let's dive right into it. Alright guys, before we start, I just want to put it out there, right? So it took me 12 months to actually become profitable, and trading is not a get-rich-quick scheme. So you must be in this for the long run and not just for the money. I just want to give you guys a very realistic expectation. As you guys can see, this is a screenshot from TradeZilla for my July's result. You can see it's July 2025 here. I've made about $140,000. I have a win percentage of 75%, a profit factor of 2.7, and a day win percentage of 85%. Here shows you that I've made around $140,000. So I just want to let you know that I stick with one simple strategy and I focus on refining that simple strategy, and it's able to make me a lot of money. So today I'm going to be sharing you the full course of this swing breakout strategy. And by the end of today's video, you'll be only using 3 different indicators to enter a trade, and you are able to draw a very ideal trend line. You can identify a valid breakout with strong momentum and to prevent any fake outs as well. You also have a very repeatable and profitable system that works every single day. So there will be no more confusion and there will be no more overthinking as well. Just one clear breakout strategy that works. Before we begin, let's just define what is a swing breakout. So a swing breakout is we swing a position that let it plays out for 1 to 2 weeks and we don't need to make any modifications on it. So the first lesson is that we are trying to catch a big movement in price that has strong momentum that flows with the big boys. So when we are swinging a position and a breakout position, we want to go where the big boys are, because the institutional are able to pump the price up, allow us to make a lot of money. We also want to enter a trade by 10:15 to 10:30 because that is when the most liquidity happens. So we only trade the first hour of the market. From 9:30 to 10:30, we only trade this time period. For trade entry, we only stick to 10:15 to 10:30 before 1 hour candle fully forms. And once we get into a position, what we're going to do is that we're going to set and forget. We're going to set where the TP are and where's the SL, the stop loss. We're going to set these 2 pending orders. We're just going to forget about the trade and let it play out by its own. And the third lesson is that we want to capture the big move and not the full move. And therefore, we do not use any time frame to trade. We only use the 1 hour time frame. We do not use the minute time frame. We do not use the daily time frame. We stick for entry and exits only using the 1 hour time frame. So for swing breakout steps, you only need these 6 steps to actually get started. The first step is fairly simple. So the EMA 20 means where the price is for the past 20 days. That's the average price. So the price must be above the EMA 20 for us to go into a buy position. And the price must be below the EMA 20 for us to go to a sell position. It's very simple to understand. So let's just give you an example. In this case, the price went above the EMA 20 at this point. So it's been staying above the EMA 20 for more than 3 days, as you guys can see. We are long buyers for this case. We are looking to buys. And for the second rule, for us to actually identify a trade setup, the price must actually be retracing to the EMA 20. So what that means is we identify that we are only looking for buys because the price is above the EMA 20. And then we want the price to go down and retracing back towards the EMA 20. It's a very clear retracement here down into the EMA 20. So the third step is that we want to draw the least steep trend line. So from these 2 examples, you can see that option A, actually we draw a trend line from the top all the way to bottom. As you can see, point A to point B. And for another option is that we are drawing the trend line from the middle candle to the bottom. And the difference between these 2 is actually the steepness. And we want to always pick the option where it's less steep, because a less steep trend line is harder to break out. So it validates that the breakout is actually true. So in this case, we'll pick option B as the valid trend line because it's less steep. Another pro tip that I want to give you guys is that for your trend line, you want the trend line to cover as many candles as possible. We call it the base. The bigger the base and the longer the base, the more valid the trend line is. But in this case, we'll always pick option B, even though the candles that it covers is less than option A, but the trend line is less steeper than that. So we always want to pick this one. So for step number 4, we want to wait for the candle to break out. So how do we do it is whenever we set up a trend line, you want to right click the trend line and you set an alert. So you just let this chart go, and whenever the price hits your trend line, it will actually gives the alert off, and TradingView will actually notify you that this price had actually crossed your trend line. So you guys can see we waited for the candle to break out. And right now we're going to go to step 5. For step 5, we want to check for the relative volume and the RS line. So RS line actually refers to the relative strength line. So in this case, once the candle broke out from the trend line, we want to check for two things. One is the relative volume, another is the relative strength line. So for relative volume, as you guys can see, it must be always be bigger than 2. So I need you guys to go to your indicator in TradingView and type in relative volume at time. So it'll give you this relative volume, and you can see that in this very case, the relative volume is 2.78. So we want the relative volume to be always bigger than 2, because what it means is that the volume is actually 2.78 times the volume compared to the past 50 days. So anything bigger than 2 will actually validate that it is a real breakout. Another thing that we look for is the relative strength line. What you can do is that you can go to your indicator and type in relative strength line. It will show you this trend line over here. So what this shows you is that if this indicator shows you blue, this stock is actually moving stronger than the market. And if it shows you pink, what it means is that it is weaker than the market, because the market is actually this line over here, where the stock is actually this line over here. So you can see that blue actually signifies that it is stronger than the market, and you want to buy stocks that move stronger than the market. That will give you a higher probability that the trade will actually work out in your favor. For step number 6, we're going to talk about how do we enter and exit a position. We identified that there is a strong breakout candle here. And then what we're going to do is that we're going to go to our indicator section in TradingView and type in average true range. So what average true range actually means is that how much the price can move on average in a single day. So in this case, it's going to move $3.31. So what we're going to do is that the candle breakout with our trend line, there is this intersection point, as you can see, is indicated right here. So how do we calculate our stop loss is that we take the intersection point minus the ATR, that will be our stop loss level. So in this very case, we're going to take the intersection point, which is $64.56, minus the ATR, which is $3.31. So it gives us $61.25, which will be our stop loss level. Another thing I want to give you guys note is that always remember that for every $100 we risk, we want to make at least $200 of profit. That is a minimum of 1 to 2 risk reward. So guys, with that being said, let's just dive right into our live example. So all the examples that I'm giving you are actually the live trades that I've taken myself. So I'm risking real money for all these trades, and I did not cherry pick all these stocks. So I just want to guide you through what are the thought processes, and so you guys can know how do I think in live markets. So the first trade we're going to go through is actually Reddit. So step number 1, we're going to determine whether we are long buyers or short buyers. So Reddit has been above the EMA 20. This is the EMA 20 line. Has been above the EMA 20 for more than 3 days. The step number 2, we want Reddit to retrace back down to the EMA 20. So step number 3, we're going to draw a trend line from point A to point B to cover as many candles as possible while being the least steep. So we're going to wait for the breakout to happen. So you guys can see that the breakout happened on the 10th of September. So what we're going to do is that we're going to go through the RS line to see whether the relative strength of this stock is actually strong. So you guys can notice that there's a huge blue area, which suggests that Reddit is actually stronger than the market. And it's been forming higher high, higher lows, higher high, higher lows, higher high as well. So it's very obvious that Reddit is actually stronger than the market itself. So we only want to long stocks that are stronger than the market. We only want short stocks that are much weaker than the market. So if we check for the relative volume, the relative volume for this breakout candle, you guys can't see here, but it's 3.4, which means that it's 3.4 times bigger volume than the average 50 days volume. So we know that this is a valid breakout because the relative volume has to be bigger than 2. That is the minimum relative volume that we need in order to identify a real breakout. So we're going to be entering a long position at the close of this candle right here. And we're going to set a stop loss. How do we calculate the stop loss? It's fairly easy. We're going to identify the intersection point between our breakout candle and our trend line. And we take that and minus the ATR. So we take the intersection point minus the ATR, that will give us our stop loss. So in this case, our stop loss is actually 237.78. After being set our stop loss, we want a minimum 1 to 2 risk to reward. So in this case, if you're risking $1,000, we want to make at least $2,000 for this trade. So let's say we enter a position right here and let's see how the trade plays out. So just like that, in 8 days time, by using one simple strategy, we are able to capitalize $2,000 from this trade. Moving on next, we're going to look at QS, which is one of the trades I've taken earlier this month. So Step number one, we want the price to be above the EMA 20 to be long bias. So the price has been above the EMA 20 for more than 3 days. Step number two, we want the price to retrace back down to the EMA 20. Step number three, we want to draw a trend line that covers as many candles as possible. So step number four, we're going to wait for the breakout to happen. So when it stops breakout, we want to check for the relative volume for this breakout candle. So the breakout candle's relative volume is actually 6, which suggests that it's 6 times stronger than the average 50 days volume, which is an ideal case for us. This breakout is actually valid. So step number two, we want to go to a daily time frame and look for the relative strength. So the relative strength line indicates that there's a lot of blue area forming higher highs and higher lows, suggesting that QS is actually stronger than the market. So we only want to long stocks that are actually stronger than the market because that will gives us a much more higher probability of the stock actually working out. So what we're going to do is really simple again. We're going to enter our long trade at the close of this candle and we're going to calculate the stop loss. So we have the intersection minus the ATR giving us our stop loss. So the stop loss is actually $12.73. So after setting that, we want a risk reward of a minimum of 2. So for every $1,000 that we risk, we want to get $2,000 back. So we entered a long position right at the close of this candle, risking $1,000 in order to make $2,000, and let's see how that plays out. So the candle actually hit our take profit, the opening of this candle, and it took us around approximately 7 days to actually close out this trade. So in 7 days, by using just one simple strategy, we're able to make $2,000. The reason I'm sharing my strategy to you is just to make one thing clear is that you don't need a super complex strategy to make money from the markets. You literally can make hundreds of thousands of dollars just by sticking to one simple breakout strategy. If my video did help you in the slightest way possible, please leave a comment down below, like, subscribe, and I'll see you in the next one.